Hello, good morning, everyone. I hope you are all doing good in the stock market. Today, let me talk about something. I want to talk about some ETFs that you can be trading when the market is going down. Most of the time, beginners, people that I advise to use Robinhood, they don't have the possibility, the ability to trade the market when the market is going down. And that is something sad because in the stock market, you can make money either way. The market is going up or the market is going down, you can still make money. And that is something that is related to the stock market only, right? In the stock market, you only have the ability to make money either way, up or down. So it is sad when I see people losing money when the stock market is going down. So today I want to make sure that I give you the right information so you can be using it in the future. I'm not telling you to use it now. Today the market is up a little bit, it's okay. But in the future, when things happen, when the market start crashing, remember this video and go back to it and watch it and take a better decision. So here are three ETF that I'm gonna be giving you. This is Pro Share Trust Ultra Pro Short. These stocks, they are short. What do that mean? It means that they are short. It's like they are shorting the market. These three stocks, they are leveraged 3 times, and they are leveraged against the major ETF that they track. So how do you trade them? You trade them on the daily basis. You day trade them when you see the market is going down, because those ETF, they are inverse ETFs. They will go down when the market is going up. They will go up when the market is going down. So in a bear market, those ETF, they are really profitable. You can use them and make a lot of money. These stocks, you can buy them. They are not stocks actually. They are ETF. They are inverse ETF. You can buy them in Robinhood. I know most of the beginners, they don't have big account to short stocks, or they don't have a margin account to short stocks. So you can buy them. Once the market is going down, you will be making money. So that's the reason why I'm bringing this to you. I just give you 3 of them. They are leveraged 3 times. Now the risk in them is you don't want to hold them overnight because their expenses ratio is high. They have a higher expenses ratio. So you want to day trade them. When the market is going at 9:30, 10 o'clock, you see how the market is going down, or we are in a bear market, the market is dropping, you can buy them, make your money in the day and get out. That's how you trade them. You don't want to hold on, you don't want to hold on to them or hold them overnight, okay? So I will compare them and show you how they work. The SPXU, it tracks the S&P 500. So is doing the inverse of the S&P 500. It's doing the opposite of the S&P 500. The S-Dow is doing the inverse of the Dow 30. So the SQQQ is doing the inverse of the QQQ of Nasdaq. Okay, so let's see how they work. I'm going to compare them one at a time. So the one that I got first was the spider, right? The S&P 500. So if I hit the S&P 500, you will see how it works. So you see when the S&P was coming down, this ETF went up. When the S&P is going up, this ETF is coming down. That's exactly how it works. It does the opposite of S&P 500. That is the first one. Right now the S&P is going up, so you will see this ETF is coming down, it's going down, it's heading down. So you can buy this ETF like when we were in October the drop of October, if you could have bought this ETF, you see how it went up because the S&P 500 was coming down. That's how you trade them. So let's go and see the next one. The next one is the Dow 30, the S Dow. So this will track Dow 30, but it will do the inverse of Dow 30. So let me show you, let me compare it to the Dow 30. So right here, this is the Dow 30. You will see how it behaves. When the Dow 30 is going up, this ETF is coming down. The Dow 30 is going up, the ETF is coming down. When the Dow 30 was coming down, this ETF is going up. So that's how you short the Dow with this ETF. You are shorting it, but because you can short it in your account in Robinhood, you can use this to short it in terms of the market going down, you buying this ETF, and the ETF is doing the inverse of the market, so you will be going up because the market is going down. That's why we call those three ETF inverse ETF. They are doing the inverse of the market or of the ETF that they track. So I will take that out and get to the next one, which is the SQQ as well. There's one ETF which is the Nasdaq 100. So this tracks the Nasdaq 100. If you look at this ETF is coming down right now, but the Nasdaq is going up. It means that this ETF is doing the opposite of Nasdaq. Okay, so hold on, let me show you. See how the Nasdaq is doing? Yes, but this ETF, if you look at it, it is coming down. It's doing the opposite of Nasdaq. Okay, so that's how you look at it, and you can trade them and make money. If you have Robinhood, put those three ETF, inverse ETF, in your Robinhood account. I mean, in your Robinhood watch list. So when the market, we know that, oh, we are getting a bear market, you can be buying those ETF and they'll be going up because the market is coming down. I hope you have understood it and you will trade it right. Keep it in your watch list, and if you see value in them, trade them. Have a beautiful day. Bye bye.